Now let's bring in FundStrat's managing partner and head of research, Tom Lee, a CNBC contributor. It's good to have you. What do you make of this report? I mean, part of the uncertainty of all of this has been the, iron fist, maybe olive branch. Back to the iron fist, maybe an olive branch. What do you make of it?
Well, I think markets should interpret it positively, because I think when we talk to our clients, many are viewing tariffs as punitive, potentially protectionist, and driving several economies into recession. This sounds like that we could actually have a positive case scenario with these tariffs, one that's either mutually agreed upon or if it's reciprocal, but maybe a good deal for businesses. And I think it would set the stage for a much bigger recovery rally than we expect.
Afterwards, right?
Yes,
I mean,
after.
The problem is the paralysis, if you will, between now and then. Like, what are we supposed to do over the next 10 days?
I mean, that's the dilemma, right? Because we still have 8 trading days till April 2nd. Most investors are getting just nauseous from the volatility, so they want to throw in the towel. But we also know that markets will bottom, or have historically bottomed, before the event actually happens. The best example is the Cuban Missile Crisis, 1962. That was a 12-day crisis. The stock market bottomed 7 days into that crisis, recovered 2/3 of the losses before the resolution. So I think that's a decent template for today.
Hey guys, what's going on? Tom Lee just delivered a very hopeful message to investors on CNBC the other day. At the same time, I was adding to the most undervalued position in my portfolio. I want to really dive deep into what Tom Lee's saying, decide whether I agree or disagree, and show you how I'm positioning my portfolio to best take advantage of this market correction. Well, let's dive right into it. First and foremost, I've been a huge Tom Lee fan for the past couple of years. I think it's very interesting how he's gotten so popular from delivering good news, whereas normally people are always saying, oh my goodness, there's going to be a crash today, there's going to be a crash tomorrow, a recession is coming. But Tom Lee has gotten his fame from just telling everybody, they're there, children, it's going to be all right. And so this is just another case of Tom Lee being Tom Lee. Now, in his message to investors on Friday, he pointed out a few very important things. The first is there's actually a potential for very positive outcomes for the tariffs that Trump is putting on, which is very interesting. I haven't heard somebody say that yet. Most people are saying, well, tariffs are obviously going to push the cost off to the consumer. If the consumer is paying more, that means that they're going to be buying less, and that decreases the overall amount of consumer spend that's going to be going on, and that's bad for the economy, right? Like, that's what we keep hearing over and over again. Whereas Tom Lee is saying, no. The introduction of tariffs could actually lead to beneficial trading arrangements between the United States and its trading partners. And so I would say that's a pretty contrarian idea, at least this point in time. Most people think the exact opposite. The tariffs are going to wreck the economy, whereas Tom Lee sees that Trump is using these tariffs as a bargaining chip, and he thinks that on April 2nd, the reciprocal tariffs are going to be taken out, and overall people are just too worried. And that brings me to my second point, market overreaction. Tom Lee brings this up time and time again. When bad news happens, generally investors will price in the worst case scenario. And that's exactly what we've been seeing over the past few weeks. Trump throws on these tariffs, he takes off the tariffs, he puts on the tariffs, and he's flip-flopping all the way around, right? And for some odd reason, we haven't seen any hard evidence that the economy is being negatively affected yet. We haven't gotten to April yet. Earnings season isn't upon us. Companies aren't telling us bad news. Now, there have been some companies that have come out and revised lower, but those have been, I think airlines and cruise ships. Like, dude, that's like a few industries. Whatever, man, who cares? What we're worried about is the overall market picture, not just what a few specific companies are going to get affected by. So overall, the S&P 500 dipping down 10%, Tom Lee argues, is a discount. And I tend to agree with him. Overall, investor sentiment is going to improve over time, and the market's going to recover. Guys, it's one thing if, asteroids are falling from the sky. It's one thing if there's actually genuinely something wrong with our economy. We see a lot of weakness, but it's a whole nother thing when investors on Wall Street are just being completely neurotic out of their mind and they're getting lost in the noise. This is just another example. I think being worried about the tariffs is a valid concern, But being worried so much that you're selling out of your positions to the point where the market falls 10%, it's an overreaction, and it's a really good time. It's a really good opportunity for especially retail investors like us to take advantage when we know that we can analyze the situation, see the facts in front of us, see the pros like Tom Lee saying stuff like this. This is a great opportunity for us to add in some of the cash that we've been having on the sidelines and buy into some of our favorite high-quality companies. All right, next on the agenda, I want to go over the recent buy in my portfolio. Last week, on Friday, I doubled my position in AMD. In my previous video, I was sort of on the fence about it. I've been talking about AMD for a few weeks now and saying it's highly undervalued. The forward PE was at a 21. It should be at a 30. But I had a little bit of hesitation, right? Because as you all know, I like to buy into winners. I like to buy into the number one winner in an industry. Now, I've held AMD for a pretty long time. I've had it since probably 2021 or 2022. So I'm overall up on the position. However, times have changed. AMD keeps getting clobbered and overshadowed by NVIDIA. Time and time again, we get the earnings reports, they beat earnings, and they keep going down. They just keep disappointing. And it's all because of this earnings report, right? This most recent earnings report. Their gaming net revenue was down 59%. Their embedded was down 13%. Most people, when they think of AMD, they're thinking of these three things. Historically, these three segments, client, gaming, and embedded, were the top three. But guys, there's a new sheriff in town. Data center is where the money is being made. And overall, AMD beat on their revenue. They beat on their earnings. And yet, AMD continued to dwindle down. It went from 160 to 140 to 120, all the way down to recently $95. And what's really interesting about that is the fact that the forward PE was so low. It was down to a 21. And so I have been slamming the table on how good of a value buy AMD has been. My main hesitation, though, was AMD is obviously not the primary winner of AI. NVIDIA is. NVIDIA is supplying all of these data center GPUs. People are going rabid over NVIDIA's GPUs, and I don't necessarily see that same desire for AMD's GPUs. But here's the interesting thing. The estimated compound annual growth rate of the GPU market is going to be 33.2% over the next 5 years. If those projections are correct, AMD, even if they just capture a small sliver of the GPU market, is standing to grow a ton. If AMD can beat NVIDIA's old chips, if they can maybe take that slice of the market for people who maybe can't afford the new Blackwells, right? The people who aren't going to be able to afford the new Rubens, like maybe the small startups who just need an H100, they just need an H200. The old stuff will work. If AMD can beat them, they're going to do fine. They're going to do phenomenally well. They don't need to be number one. Historically, AMD has been able to hold at least 10% market share against NVIDIA in segments where they coexist. So NVIDIA might have 90% of the market share, but AMD usually has somewhere between 10 and 20%, something like that. If AMD is able to just capture 5 to 10% of this $364 billion, that gets you between 18 and $36 billion with a B. AMD has the opportunity to capture a decent-sized chunk of the AI wave. And that's exactly what they're starting to do. This company has really good financials, they have low debt, they have growing free cash flow, and most importantly, they have a stagnant number of shares outstanding, so they're not diluting the shareholders anymore. Even though they're not the number one in AI, even though they're not NVIDIA, I still believe that at the current valuation, AMD is going to kick some serious butt in the market. I think it's going to outperform. So, I ended up buying AMD shares. I doubled my position and I bought the shares at $105, $105.25. And Ever since, just today on Monday, the shares have gone up to over $114 a share. Now, I don't try and time the market. I don't try to predict the market. I don't try to predict whether the market's going up or whether it's going down. For all I could have cared, AMD was going to go and bounce right off of $70, and it was going to sit there for 6 months. I was going to be completely fine with that. What was important to me wasn't necessarily what happens over the next week or over the next month or even over the next year. What's important to me is I am buying a very quality company at a reasonable price. And with AMD at a 21 PE and a high growth rate, I felt extremely comfortable buying in at $105 a share. So now AMD makes up a total of 2.9% of my portfolio, and I ended up doubling the number of shares that I own. Now, if AMD ends up staying around this price point, anywhere below a 24 forward PE, I'll continue to add to the position, and I would like to make AMD anywhere between 5 and 10% of my portfolio. I'm not scared of that. I don't want to dilute the NVIDIA weighting, but if AMD is a tasty buy, it's a tasty buy, and I am not one to keep myself from a sweet treat. Alrighty, that's all I have for you all today. Thank you so much for watching, and if you feel like I've earned it, please subscribe and drop a like. Thanks, have a good one.